overnight.
I believe in reason and common sense.
Leith Van Onselen from Macro Business with a treasury of common sense.
Common sense never goes out of style.
Chief Economist of the MB Fund and MB Super and co-founder of Macro Business, it's Leith Van Onselen. Headline here, it's going to be a long, hard road back. Real wages, you say, may not recover until 2040.
On Wednesday, the Australian Bureau of Statistics released the December quarter wage price index. So what that is, that's basically the ABS's gauge of wage growth across the economy. And that came in at 0.7% for the quarter and 3.2% year on year. So, it was a good result from the RBA's perspective, because 0.7% for the quarter, if you annualise that, you times it by 4, that gives you a wage growth of 2.8%. So, which is obviously well within the RBA's, inflation target. Now, obviously, wages and inflation are different, but generally speaking, when the RBA sees slower wage growth, it means that we're likely to get less inflationary pressures across the services sector of the economy, et cetera. You're going to have less, pass on the business costs and those sorts of things. So the RBA, I imagine, would be very happy with that result, because it suggests that these inflationary pressures are coming off even more quickly than expected. And it was the slowest annual wage growth since the third quarter of 2022. Now, as expected, good old Treasurer Jim Chalmers crowed about the result, and he boasted that Labor has delivered 5 consecutive quarters of real wage growth. Now the way he came about that was we got the wage price index went up by 0.7% over the quarter. The headline CPI, the Consumer Price Index, was 0.2%. But obviously that was manipulated heavily by these, energy subsidies and all these other things. The measure that the RBA looks at is the underlying inflation, or the true mean inflation. So that's basically inflation when you take out all the volatiles and the stuff that's been manipulated. And that was tracking at 0.5% in the December quarter. So, yes, we still had some wage growth. But here's the thing. So if you're, obviously we're all Australians here, most people work, we're listening to this stuff. Despite the artificial inflation suppression by the government, real wages remain 6.2% below their peak in the middle of 2020. And if you deflate the wage price index by the RBA's preferred measure of true mean inflation, Australian real wages over last year, so they did rise in the fourth quarter, but over the whole year they're actually flat, and they haven't rebounded at all. This is only when you deflate the wages by the inflation rate, which isn't really a true cost of living indicator. I mentioned a few weeks back that the ABS also releases a survey called the Cost of Living Index. And what that does is it tries to measure the average cost of living for different cohorts of Australians. And the biggest cohort that are there, and the one that we all care about, obviously, if you're working, you're earning wages, is employee households. So that's basically working households. Right. And what that showed is that cost of living for the average typical working household rose by 4% in 2024, which is obviously higher than the 3.2% growth in wages. So when you actually compare wages against the true cost of living, wages went backwards. And in fact, they've gone backwards by just over 10% since the middle of 2020, when you deflate the wage price index by the employee cost of living index, which is a truer measure of cost of living. So it's a very bad situation. And here's the rub. The RBA's own forecast, so they announced the interest rate decision on Tuesday. Obviously, they decided to cut interest rates by 0.25%. They also released the February Statement of Monetary Policy. What that is, that's basically a report on the economy and what the RBA thinks is going to happen, and it contains a whole bunch of forecasts. And they have forecasts for wages and inflation. And what it showed is that by the middle of 2027, real wages are still going to be 5.9% below what they were at their peak. So that's 5 years after the peak. 7 years after the peak, they're still going to be nearly 6% below. And in fact, if you extrapolate the RBA's forecast, so you draw a straight line from where they are now to what they forecast in the middle of 2027, and you extrapolate that line out, it suggests that real wages won't recover until around 2040. That doesn't mean that that's what's going to happen, but that's the kind of trajectory of wage growth rebound that we're looking at here, based on the RBA's own forecast for the next several years. It's an incredibly slow rebound, and real wages just aren't going to recover anytime soon from their, back to what they were.
So the reality, though, for the Treasurer, as much as he can say, who's the clever boy then, for so many people, what he's talking about is really just an abstract string of numbers. The blunt reality for the people is the rent they have to pay, how much it's going to cost them for groceries.
The mortgages.
Yep, all that. And they're going to be confronted with that for a long time, according to these figures. But even in the short term, before they go to the election, he'll really have to sell the idea that, he's doing the right thing by them when they're facing a situation every day that says otherwise.
Yeah, that's right. And again, real wages, when you adjust for the cost of living of workers, the employee households, it's fallen 10%, which that explains, the crux of this cost of living crisis that Australians are experiencing. It also explains why, I guess, the polls have basically swung against Labor, a first-term government, which very rarely happens, and shows that they're, at risk of losing the election. And if Labor did lose the upcoming election, that would be the first one-term government we've had since the Great Depression in the 1930s. So, it's something that doesn't happen very often, obviously. And the fact that the voters have already turned against them, it's so early into their, basically after their first term, suggests it is indicative of the fact that their real wages have fallen so heavily. And it's not just real wages. I've mentioned previously that real per capita household disposable income, which is basically real wages once you adjust for tax rates, mortgage payments, and things like that. So some other variables in there. Real per capita household disposable income's fallen by about 8% since the Albanese government came to office in mid-2022. And even according to the Reserve Bank's forecasts, again, they contain forecasts in the Statement of Monetary Policy, they show that Australia's real per capita household disposable income will still be 5% below what it was when Albo came to office in the middle of 2027. And again, if you extrapolate the RBA's forecasts out, real per capita household disposable income won't recover until the early 2030s. So it's a little bit better than wages, and the reason why the RBA, predicts it to recover faster than real wages is because it predicts that interest rates will fall, which means lower mortgage payments, which therefore means that disposable income will rise faster than wages. But, either way, whether, Australian households are basically looking at a lost decade of wages, household income.
It is, go on.
It's a really dire situation.
Indeed, it's not encouraging, but it's interesting, isn't it, Leith, that even though there's this big swing away from the government, it's not all going to the coalition. And I saw a poll the other day, which I really don't think meant a lot because it was just based on a what-if scenario. Do you think the coalition would have done better? And people were saying, well, probably not. But, how would you know? I didn't think it was a really worthwhile question to ask. But I would say, the folklore over the years has been that the coalition are better managers of the economy. But that doesn't seem to be coming through strongly at the moment, does it?
Yeah, well, certainly, definitely the polling has been better, and there was a poll that came out a few days ago from a group called JWS Research.
Yeah.
And what that showed is that it was basically a voter attitudes poll. And it showed that the number one and number two concern of Australian voters is, number one, cost of living. And more than half thought that the government had failed there.
Right.
And sorry, I should say more than half identified cost of living as the number one concern.
Right.
And the second major concern was housing affordability. And on both those measures, those were the two areas where the voters marked down the Albanese government the most. Thought that those were the two areas that they've performed most poorly in. So, for example, on cost of living, just over 20% of people polled thought that Labor had done an okay job there. And for housing affordability, it was about 25%, which obviously means that nearly 4 in 5, or three quarters of people thought that Labor's done a very poor job on those two issues. So that there is really the crux of the issue. Now, obviously, whether or not it means that these votes are going to go to the coalition, who knows? I suspect both will have fairly low primary votes, and it'll end up being coming down to preferences. And a YouGov poll that was released about a week ago suggested the coalition will get far more seats, but they might not win an outright majority because It'll obviously come down to minor parties, the Greens, etc. So, we could end up with a little bit like we did when Kevin Rudd, the first election between Tony Abbott and Julia Gillard.
Yeah.
Tony Abbott got more seats, but Julia Gillard formed government because the three independents went with her. And we could have something like that, but on a bigger scale. We just have to wait and see.
Interesting times. And that's a curse, isn't it? A Chinese curse, may you live in interesting times?
That's right, it is too.
All right, Leith. Appreciate your time and comments as always. Thanks for that.
Yeah, thanks, Mike. Speak to you next time.